bring in Clay Seigle, Senior Fellow for Energy Security at the Center for Strategic and International Studies. A little tight here with this Kenvue breaking news, Clay. Even if they raise output levels, which it's likely they will, do you think they would be able to follow up with real, meaning the actual barrels, or is it going to be a hike mostly on paper?
Hey, Brian, happy Friday. Yeah, that's always the issue going into these supply hike decisions. And you and I have seen this a number of times throughout the cycle. The market is expecting them to hike a bit more, and that's why we're seeing this slump. And so we're going to get into the second tranche of supply curtailments and bringing that oil, at least gradually, back into the market. They've already done about 2.2 million barrels per day. The next set of supply cuts to be rolled back is more like 1.7. But I think you hit on a really interesting point here. One of the side benefits of hiking now in an aggressive way is to actually provide a little bit of a reality check on how much spare capacity there is. Because that spare capacity, and the market thinks it's about 4 million barrels per day, acts as kind of a ceiling on prices. So if you actually allow people to ramp up and the number of new barrels hitting the market is less than we're expecting, and they don't get anywhere near 4 million barrels per day, then that rationalizes the market's perception of spare capacity. It reprices a bit higher, I think, going forward. And when we get into future cycles where they need to cut, the skeptical analysts out there like us will not be able to say, well, there's so much of that that's sort of paper and theoretical. They're really not going to do what they say they're going to do. They'll have more credibility that way.
Is that why oil's at, it's down today? It's $62.50, but it's not at $40. Even with more barrels being added, demand seems to be strong enough. And by the way, OPEC's been more bullish on demand than, say, the IEA. The IEA's been wrong with about a lot of things. But that said, is that why oil's not at $45? Because there is still that underlying demand?
Yeah, demand looks okay for this year for sure. It looks to be a bit weaker compared to supply that's coming on stream in 2026. So that's one of the kind of like the yellow lights that OPEC has to pay attention to. But you're right, in the near term, there are signs that a bit more supply hike is justified. U.S. crude inventories are at very low levels, I think at the bottom of the chart for this time of year. And that forward price curve is still holding up pretty tight, at least in the first 1 year plus out into the term structure. So there's reasons for optimism there, and they really just need to fine tune this thing right so that they are not oversupplying the market in a way that demand can't accommodate in the new year.
The Russian oil price cap has not slowed down their exports at all. They're still pumping and producing 9.9 million barrels a day in Russia. Are you surprised by that, Clay? Hasn't worked.
Well, not really, because Russia's buyers, India, China, some of the others on refined products are still buying, notwithstanding some of the recent moves, like the Trump administration's imposition of that extra 25% tariff on India as punishment for continuing to buy Russia. The one kind of X factor to keep an eye on there is this Ukrainian military campaign against Russian oil refineries. There was a big spike in attacks in August. It has taken some units down. It is going to push maintenance programs deeper into the fall and winter. So they could have problems on the diesel side. Of all the things you need to keep your eye on, it's the Ukrainian Flamingo, that new cruise missile that's said to have a much more powerful warhead than the drones that they have been using thus far. If that gets employed successfully against those refineries, it could be a game changer for Russian oil supply, for revenues, and maybe even the outcome of the war.